Investors, it's important to take a step back to look at your current investments with a new lens to see which companies will be successful in the future and will be in the right place at the right time. In our July 2022 video newsletter, which you should subscribe to in the link in the description below if you don't already receive it, we took a deep dive into the recent Brightline deal, an example of how a company was able to grow exponentially by being in the right place at the right time. To learn more about this deal, stay tuned. We'll show you by sharing our Mink Sites video newsletter. In this edition of Mink Sites, we will walk you through the Brightline deal, a recent deal where KKR led a group of investors to invest in Brightline. We'll go through the history of Brightline, followed by the details of the deal, and then we will analyze the deal. So let's get started with the history of Brightline. Just a few years ago in 2019, Amelio Health, which later changed its name to Brightline, was created to help children and families navigate the complex behavioral health space using technology-enabled solutions. Later in that year, in December 2019, the company raised $5 million in a seed funding round from the venture capital firm Oak HCFT. The HC stands for healthcare, and the FT stands for fintech. In 2020, after changing the company name from Amelio Health to Brightline, the company raised $20 million in Series A funding led by Threshold Ventures and previous investor Oak HCFT. In this round, healthcare organizations Blue Shield of California, Blue Cross Blue Shield of Massachusetts, and Boston's Children's Hospital also joined, as well as a few other investors. This raise occurred in August of 2020, just months after the pandemic spread throughout the world, which rapidly increased the need for behavioral health solutions for children and families. This led to another raise in 2021, where in June, Brightline raised $72 million in a Series B round led by GV, formerly Google Ventures, many new investors, as well as many of the investors from the Series A round. So, to recap, the company raised almost $100 million within just a few years, but it was still growing, which resulted in the deal we are talking about in this video. So, let's look at the details of the deal. KKR, through its recently raised $4 billion KKR Healthcare Strategic Growth Fund II, led a $105 million Series C funding round, along with many of the Series A and Series B investors, to help Brightline's national expansion. So let's analyze the deal. This deal reminds us that in a time of crisis, while there will be companies that do not do well, there will be companies that do. The pandemic was painful for many businesses. Many restaurants had to close. Many retail stores were shut down, and amusement parks could not open their doors. Many types of businesses were negatively affected. That being said, the pandemic was also helpful for many businesses. Food delivery apps took off. Online stores had a large growth in sales, and Brightline grew exponentially, since the pandemic created a large demand for the company's tech-enabled behavioral health solutions for children and families. Investors, there is record inflation in many areas in the world. Interest rates will be changing quicker than in recent past, and there are many other issues such as supply chain disruptions. I recommend that now is a good time. Take a step back and look at the investment landscape to see if you can figure out which companies are getting hurt because of the current environment and which companies are thriving. And more importantly, will continue to thrive in the future.